Jason Calacanis joins us to talk about what big tech has been through over the last couple of weeks. Welcome back, Jason. Good to see you.
Good to see you, Carl.
Where has your head been on Parler, and what's significant about their return if they can make this stick?
Yeah, I mean, Parler was like the island of like the misfit children. Everybody who got kicked off of Twitter, found a home there. And it was pretty gnarly. I've been on it since it started. And they were doing very little policing. And people were saying some pretty crazy incendiary stuff on there, including somebody who was pretty high profile saying they should take VP Pence and have him face the firing squad for treason. And this kind of inciting of violence, as we saw on January 6th, is no longer a theoretical somebody screaming fire in a crowded theater. I mean, people are dying because of this dog whistling. And my belief is that some group of law enforcement folks went to Amazon, Google, Apple. I don't have definitive proof of this, but that's been the chatter here in Silicon Valley, and just said, hey, listen, here's the receipts. Do you want to have another January 6th? And do you want to know if you could have avoided it? And the other thing that's occurring is the employees at these companies simply do not want to go to work knowing that they're supporting Trump's unique brand of chaos. And so, Trump did... he gave them an off-ramp. In the final 2 weeks of his presidency, he gave not only the GOP an off-ramp to disconnect from him, he gave Twitter and very easy, YouTube a very easy exit ramp to disengage from him. And cynically, the big social was very much in favor of Trump and the ratings he brought, not unlike some people cynically feel about the media business, giving him a lot of airtime for ratings. And, cynically, 2 weeks before Trump's gone, that would certainly appease the blue wave that's about to hit our shores on Wednesday.
Right. So, but where does it end, Jason? And are you worried about, as we've moved from, Twitter suspensions to actual cloud service, that this will bleed into areas that do not reflect a true danger, but are more politically motivated?
Yeah, this is a very interesting question. What I've encouraged my friends to do is not take the black swan event of Trump and make policy based on Donald Trump's unique brand of chaos that he creates in the world. It's like basing things on the Joker's behavior in a Batman movie. Like, he did crazy things that really stress test not only our democracy, but it also stress test everything he touched. And, if it was me and it was Twitter, I would have given him a 100-day suspension, and then, just to not give, the right wing, or the alt-right too much ammunition. But these are private services, and they have the right to serve who they want. And all of this is going to do is create a whole nother class of startups for us to invest in and for us to back, and the free market will do its work. So there'll be an AWS competitor that says, hey, we're going to put our foot down and we're going to allow freedom of speech on a level that might make some people uncomfortable. And so it'll just be a business opportunity for some other companies to service these folks. And I do think it's kind of a one-time event. And I do think that it was driven by public safety. I don't think this was a coordinated, we hate Trump attack, because all these, Tim Cook was more than happy to go to meetings with Ivanka and Trump for the last 4 years. I mean, he was, at the right hand of Trump in every photo op. So it's obvious that this was more about public safety than, the employees of all these Silicon Valley companies hating Trump.
Jason, a couple of follow-ups to what you just said there. One is, it sounds like you think there will be a further fragmentation of social media, not just fragmentation of what people are seeing and what they're interacting with on platforms like Facebook and Twitter, but a full fragmentation with people with different political beliefs just communicating on different platforms. Is that right?
No, I think this is like a one-time stress test on the system, and that we're going to go back to very boring politicians. I think people voted for boring this time with Biden. Who knows, in 2024, we might vote for a very boring Republican. And I think we'll all get along a lot better. And I really do think this is like our system was stress tested by a bad actor, an insincere person, Trump, who just stress tested it. And I don't think that there's a need for a Parler. I think a lot of these folks will, from the alt-right, were driven from the right to the alt-right, just like some people on the left were driven into hysteria over Trump and got Trump derangement syndrome. So I think the good news for our country is it's going to be hopefully a very boring 4, 8, 80 years out of Washington, and we don't have this kind of chaos. The real challenge was you had somebody sitting in the president's seat acting, really erratically. And that is a very hard thing. Somebody's got the most important seat in the world, in the free world, and they're behaving in a very irrational manner. And you saw it in the people who stormed the Capitol. They said, the president told me to do it. Who could ever come up with a litmus test like this? It's crazy.
Jason, it certainly was a very unusual situation and has been a very unusual situation. But I'm wondering if you think that the actions we took, Twitter and Facebook, take just in the past couple of weeks in order to shut down the president's account, do you think that represents a sea change in terms of how they're thinking about content on their platform, perhaps in anticipation of changes to Section 230 and changes to make them more liable to what's shared on their platforms?
Yeah, I think that we're all going to come to a pretty basic agreement, which is don't incite violence, don't be a racist, don't stalk people, public safety. And we'll get back to some reasonable freedom of speech approach from these platforms. I think we'll keep 230. And I think the idea that you can throw people off the platform has now been highlighted, and that can be done in an unfair manner. And I think that'll make the platforms maybe come up with an ombudsman type approach, like the New York Times used to have, an ombudsman who would comment independently on their reporting. I think that kind of setup for social media would be very helpful. If there was a group of people who you could appeal to, if you were, removed from social media, and they could say, hey, they could arbitrate it, and that would be a nice solution, I think. And I think you'll see some self-regulation from the Twitters and Facebooks rather than, putting their foot down in some way.
I wonder what is really going on here, because there were these talks about Amazon squashing free speech and this existential threat to Parler. It's been 10 days since AWS dropped Parler, and Parler's coming back. Also, is there a business model for loose content moderation? I mean, you talk about the idea that maybe there's an AWS or different social networks for like loose content moderation. Isn't that kind of an invitation to get your pantsuit off if you're a company? And so how much more capital do you have to raise, and how much more insurance do you have to have? And so therefore, how much do you have to charge? Because what advertiser is going to want to be next to that, right?
100%. You got that. You nailed that one, John. Any regulation we add to these companies reinforces the incumbent's position, because they have the ability to hire lawyers and moderators, and Parler doesn't, right? So, but I don't think most rational people would like to run a service where people are inciting violence. And so that's a very unique group of people who would want to live in that world. And it might be offshore, where it might be some really hardcore libertarians. But what they're going to find is not only do people not want to invest in that company or own equity in it, they're going to find people don't want to work for that company. And if you've been on Parler, it's garbage. It's a terrible app. It's poorly designed. It's slow. You're not going to get world-class people to even want to be on the platform or to support it, invest in it, or build it. And that, at the end of the day, I think is a big part of what happened here. Is Jack did not want to come to work and have his top engineers and his top lieutenants leave the company. And I think it was getting to that point where it was causing so much chaos, just like it did at our Thanksgiving tables or Christmas, celebrations or Zooms. We had to deal with internally in our families fighting. This is what every company was dealing with Trump's insanity. And thank God everybody voted boring. I am so excited for 72 hours from now to be able to focus on work and family and defeating the virus and not have to deal with Captain Chaos anymore. I think it's going to be wonderful to remove this cognitive overhead from all of our CPUs.
Jason, Your broader point's good, and that is that companies, they are families, and you got to hope that behavior in general is self-correcting, no matter what part of the political aisle you're on. It's great to see you. Thanks for kicking off our hour today.
Stay safe, everybody.
We'll see you soon.
Better days
Jason
coming.
Calacanis.
Our next guest is saying the recent Reddit trade is, quote, the messy middle of a revolution. Early Robinhood investor and Inside.com founder Jason Calacanis joins us now. Jason, what a story. What an investment for you, I'm sure. You say you were off skiing, but now you're back paying attention to this story. Now, first, there's a conspiracy theory advanced without evidence by Tyler Winklevoss on this show yesterday that political leaders forced Robinhood to stop the buying yesterday. Is that what happened?
Yeah, I have no information on that. And, good luck with the Winklevoss twins and trading Bitcoin. They're total heroes to me. So I'm joking. I don't know that they know what they're talking about. So I would disregard whatever they say. But it is certainly an interesting turn of events. And yes, that's a blizzard behind me. And this is just actually tipped over into the consciousness of everybody. I mean, on the lift in front of me, people were talking about, should they buy GameStop? I kid you not. and this was like a 15-year-old kid and his parents, and they're talking about GameStop, and they're explaining shorts. And I was like, you know what? This is actually why I invested in Robinhood. This is why Robinhood was formed. Robinhood, and I don't speak for the company. I don't have any inside information. I did not talk to Vlad, although I did see the great hit that Andrew did last night. That was a good get. Congratulations on that. And when they pitched me this idea at Antonio's Nut House in Palo Alto, before the product was launched, Vlad said to me, we want to get millennials to trade stocks. And I said, these are the same people who are totally commitment phobic. They're YOLO. They're on their mom and dad's, Netflix accounts. They don't buy cars. They take Ubers. How are you going to get them to do that? What's the opportunity there? He goes, well, what if we do? What if we do get them to trade? What would that look like? And I said, well, okay, great. I like that idea. It's a new market. And I said, retail's gone. There's no retail investors. He said, Jason, that's the opportunity. I said, okay, I like the way you're talking. Great, keep going. What's the business model? He said, we're going to let them trade for free. And I said, I'm in. This is a great idea. Obviously, that will get people. I mean, this is what my life is. The same pitch as Uber. We're going to, people are going to give up their cars and they're going to use an app.
But tell me,
these crazy ideas work. And
Jason,
and I think, go ahead, John.
Is this free to trade model as we see it now sustainable under these conditions? I mean, how much money is Robinhood going to need in reserve? It's going to have enough to operate when things like we've seen over the past few days happen.
Yeah, and that clearly is the issue here. Clearly, communication wasn't very good yesterday. I think Vlad owned that. Great. These are growing pains that these big companies go through. Facebook went through 12 of these. Uber went through 17 of these. And I talked to you about every single one of them. Sometimes when you have hyper growth, you have these kind of edge cases. And so they're going to obviously need to have more money on hand. Clearly, I'm not an expert on these regulations and what the covenants are and the coverage needs to be. But this is a great stress test of our financial system. And it's absolutely awesome that young people are on Wall Street bets getting this financial education, because the way to accumulate wealth in the United States is to own equity and equity participation. You cannot win just being, and you can't certainly change your strata in life and move up into another level if you don't have equity participation. It's very hard to do that on income. And so it's great that this education is occurring, but you have to understand, when something hits number one in the App Store, that is a large amount of downloads. So this is as if everybody in the country decided they're going to go to Las Vegas on the same weekend. This is unsustainable. It's unsustainable to onboard all these accounts, I am certain. And it's unsustainable, certainly, to have so many people either trading on margin or doing, puts and calls. But this is unprecedented, and I think they're going to need to digest it. And they're not the only ones, are they? Every single broker is having the same issue right now. There's too much participation, and that participation will take time to digest, and we'll get on the other side of it, I'm sure.
Jason, it's Deirdre. You mentioned the interviews that Vlad did last night, and he said in a number of them that Robinhood has restricted trading to protect their customer. Who is Robinhood's customer? Yeah,
I mean, I think ultimately it's those retail investors. If they lose those retail investors, there is no business.
The retail investors, Jason, a customer is someone who pays Robinhood. As you've mentioned a few times, the retail investor does not pay Robinhood. Those are commission-free trades. The customer is actually Wall Street, isn't it? It's the money, it's the market makers who pay for order flow. So how can the business model be let traders trade for free? It's actually making money off of order flow, is it not?
Well, of course, and they're very upfront about that now, and it's been very clear. But some businesses are based on having large audiences that trickle.
Are they? Like you said,
yeah,
they never talk about that. They talk about democratizing trading, and they talk about commission-free trades all the time. We rarely hear them talk about order flow.
I think people understand it. I think it's in all the terms of service, and they've been very clear about it. So, it's very similar to the Facebook situation where you get a free product. If those consumers don't use Facebook, the free product, or Instagram, or Twitter, the free product, or CNBC, the free product, you don't have the ability then to make the money off of that audience, if you will. And so,
okay, but Jason, you just brought up
easy
Facebook.
To say that. Yeah, sure. Go ahead.
So there's been a lot of trust lost in Facebook over the last few years. Yeah. So why should traders trust Robinhood if they now know that they're turning around and selling their trades to market makers and perhaps not executing at the best price?
Okay, so number one, they've been clear about with the market makers that's how they make money. Everybody understands that. The second piece is, should they trust them after having turned off trading yesterday? I think they have to rebuild that trust. So I think that these companies, when they go through crises like these, and every big company, whether it's Tesla, whether it's Facebook, whether it's Uber or Airbnb, when somebody trashes an apartment, these new platforms that get to scale, there's always going to be these crisis moments. And the way you can judge the founder is, do they communicate well? And I think Vlad's doing a better job of that. And I think he did a good job last night on CNBC. And I know he'll do a better job tomorrow. And then you asked me the question, let me give the answer, please. And the answer is, they need to earn that trust every day by having a stable, great product that delights users. And whether it was Uber, which took a lot of hits, or Facebook and Instagram, yes, all these platforms have taken hits. They have made mistakes. What I look at as an investor in them is, how do they respond to them? Do they learn from them? And do they get stronger?
Jason, what I'm hearing you say, basically, I mean, I'm less concerned about Robinhood and more concerned about the broader market.
Yeah.
Is that this is
that's the big
classic cyclical... this is a classic cyclical flow of retail into the market, and that it will ebb out as it always does. I don't hear you talking about major structural change or some sort of end of centralized finance, as we know some people have tried to argue on our air.
Yeah, that's a little silly. I think that's the crypto folks going down the crypto rabbit hole, and they think like nobody's going to be in charge of anything and the entire world's going to be on some immutable blockchain that's not controlled by anybody. That's super interesting and a great intellectual argument. It's not very realistic. Sometimes you do need to have central controls, and Bitcoin is a fantastic technology. It does not apply to everything. So they're a little drunk on the distributed finance and all that stuff. I know it's real, but you can't apply it to everything. And what we saw here was these shorts. I mean, I think that's the bigger issue. It's easy to gang up on Robinhood, whoever the lead company is. All due respect, Deirdre, but and they do have a responsibility as the lead company to be the best performing company, and I guarantee you they will be the best performing company. I've seen this movie before. Putting that aside, the big issue here is, who is shorting this stock? How can you short 130% of a company? I still don't have a great answer for that. That makes no sense. And then have these shorts all covered their position? And then if people are buying the stock now at 20 billion or 30 billion or whatever they wind up buying it at, is there any chance that the company can live up to that? And has the company's fate changed? Have they done a secondary? Have they put $1 billion of this, incredible acceleration in their enterprise value into their coffers? And is there some vision here for how GameStop becomes a $20 billion company? I could see betting on it becoming a $5 billion company,
right.
But
20 is
that's what I'm getting concerned about.
I'm concerned about that too, Jason. And something that I've raised this week is part of the potential, it seems to me, of not just Wall Street bets, but this whole surge that we've seen in consumer interest in finance is handling some of the nuts and bolts too. I mean, equity investing is great, but so is saving. So is budgeting, so is getting those tools and tips together, getting good research together so that the individual retail investor has really deep insight into what's happening with these stocks. Do you think that's going to happen? Is that an angel investing opportunity? And when? How?
It's already happening. I mean, what you're seeing right now between, is young people who have time on their hands, instead of gambling, instead of going to Vegas, instead of going to school and being on Zoom classes and playing video games, they've decided this is a more interesting video game. And you know what? They're learning by doing. And that is the best way to do it. If you don't understand, if you want to learn how to play poker, just get at a poker table and play the low stakes game.
But that's what I worry about, Jason.
Don't play high stakes, though. That's what we need.
You're saying instead of gambling, and I hope it's instead of gambling, it's harder to do the research versus to be on a ski lift and talk about, should I buy GameStop? It's harder to download a PDF 100%. Somebody spent, and figure out a model for selling that, not just to 50 or 500 people, but to 500,000 people. How is this movement, or maybe the kinds of Silicon Valley innovators who brought us Robinhood, how are they going to get us there?
It's already happening. If you just go to Wall Street Bets and you start reading some of these threads, as my bestie Bestie C said on the air on Wednesday when he was going on his tirade on a halftime, I believe, these folks are very sophisticated and they have time on their hands. And collectively, the internet can produce amazing things that individuals cannot. One example of that is the Wikipedia. There is no paid staff, yet they've built the biggest corpus of knowledge in the world ever created, and it's still growing every day, day in and day out.
They're always begging me for money, though.
Yeah, I know. Somebody's got to pay for this stuff, right?
Yeah.
Back to business models. So I think that's what's happening. And they're on Discord servers talking about it. And it's going to be amazing for society. But what they're also doing is they're stress testing all of these crazy hedge fund folks who short stocks and then do all the fear, uncertainty, and doubt, the FUD that they did to poor Tesla, betting against Tesla for years. And I had to come on the air here and say, listen, it's the greatest car in the world. The guy landed 2 rockets at the same time. Why are you shorting this stock? It's so stupid.
Yeah.
Shorting Elon Musk is the stupidest thing you could do. This is like shorting Apple, and Steve Jobs.
Not to say that all shorting is bad, though. Chanos shorted, right? Enron. Yeah. We had shorts against the housing bubble. Sometimes the shorts are the heroes. I got questions about what happens when we end up in that situation. But, Jason, I think we got to leave it there.
Thank you for the time. I'm going to get out in that blizzard and hit some runs.
Enjoy those slopes. Jason Calacanis, always great to have you.
Joining us this morning to talk about this and a lot more is angel investor, Inside.com founder, and early Uber investor, Jason Calacanis. Jason, welcome back. Good to see you, as always.
Good to see you. I hope you're safe, Carl.
Yeah, we're doing okay. Let's take your temperature on
better, right?
Valuation right now. Yeah, I think we're hanging in there. Valuation, all the things we just talked about for the past 90 seconds. How much of it is a topic of discussion in your circles, and how much of a concern is it in your circles?
Yeah, I think what we're seeing is, and I've had this discussion with a lot of people who are managing money in pools of capital. And if you look at commercial real estate, it's absolutely been devastated because people are working from home. So all of that money that would have went into commercial real estate is now looking for a home. Then we look at residential real estate. Nobody wants to live in San Francisco. It is becoming a ghost town. When I drive through San Francisco, it is like something from a dystopian science fiction film. There is nobody on the streets, stores are closed, and just giant mansions in Pacific Heights are empty. So nobody is buying residential real estate. Then we look at travel, hotels, and small businesses like restaurants. All the money that was put into those efforts, that's looking for a home. So where is somebody going to put their money? Well, you're not keeping it in cash because they're printing money like it's tissue paper right now. So money needs a home. Money is looking to grow, not become devalued. What's the safest bet? Well, as far as I'm concerned, Disney, Google, Facebook, Netflix, Uber, Tesla, Square. These are companies that will be here in 10 years, and they're going to thrive because they're the anti-real world portfolio. That's obvious. Now we put another layer on top of that, which is we haven't had retail investors since 1999, 2000. And we have a generation of people who are on their parents' Netflix accounts, living in their parents' basements, who now have discovered an app called Robinhood, which I was lucky to be one of the earliest investors in. And we've got over 10 million people participating in the market who, by all logic, you would think have no interest in the future. At the same time, gambling has gone away. So there couldn't be a more perfect storm for technology and for people placing those bets. And so then one would naturally ask, your next question should be, is this going to end in tears?
Well, I mean, my next question is commercial real estate and urban economic activity will go down until it stops going down. And at that point, when does the mean revert?
I don't believe it's going to. I think what we're having is such a seismic shift in people's personal worldviews due to work from home that it will be impossible for an employer to get people to come back to offices. And listen, I am an in-the-office guy. I want everybody in the office. You cannot work from home. You want to work from home, you take a sick day. We're in the office getting stuff done. We're revving on the product. That's always been my position. And now I lost the war. I'm not going to be able to compete for people unless I tell them they can work in Napa, unless I tell them they can work in Lake Tahoe and come see me every month, maybe for a retreat. And people are not going to spend, $2,000, $3,000, $4,000, $5,000 a square foot in Manhattan if they could spend $3,000, $4,000, $5,000 on an acre with broadband up in New Paltz or Albany or Hastings on the Hudson or out here in Napa. This is a lifetime change. They're not coming back to the offices, Carl.
Jason, this is John. Good morning. I wonder.
Hey, John. Good to see you.
Good to see you. I mean, Facebook, Google, so many companies spend all this money designing these spaces for people, having these open cafeterias, bringing in contractors, making this wonderful food that became so much a part of the culture. Are they going to be able to completely dismantle all of that for a different mode? Or if the fear goes away, is that going to change? So, but I also want to know from you specifically, because you're such a prolific not only angel investor, but also part of that ecosystem. Is there enough capital out there to keep these smaller operations going during this difficult time? Or are we going to see a lot of small startups shutting down and kind of going into hibernation mode?
Yes, those are two great questions. I'll take the last one first. So we invested in 75 companies a year. I've invested in 250 startups over the last 11 years. In the first 2 or 3, Uber, Robinhood, Thumbtack. And what I see in my portfolio is, maybe 20% their revenue went to zero. And thank goodness for the PPP loans and the unemployment. It's like, I hate Trump with every fiber of my being. I think he's the worst human being on the planet. That being said, he got that right. And you got to give him credit for pouring money into the system because we saved a lot of jobs. Then I look at 20, 30% of the updates they get from startups, and revenue doubled, tripled during the pandemic. These are the ones that are used by people with keyboards or who are staying home and have extra time. And then in the middle, there was a lot of adjusting. All of that's been done. Small startups, 5 to 500 people, are nimble. And so they are able to shift on a dime. If you're an airline company, if you're a hotel company, if you're a restaurant, you cannot make that shift. It's just not possible. Now, to the earlier point about these campuses were vanity projects, and they were a way to lure employees to come work here and not on Wall Street, to work here and not in Hollywood or for God forbid, one of those like Boston Consulting Groups or one of those jobs. So we were able to take all the talent away from Wall Street and those, jobs where you write reports that nobody reads. Mission accomplished. Those are going to be deprecated, or they're going to be put on ice, or they're just not going to grow them. And so they'll still have those campuses for the people who want to come to offices. But given how expensive things have gotten, people are really smart, and they're realizing that the work can be done from anywhere. And this was about 10% of the market. People like WordPress, Matt Mullenweg, another company called Envision, they kept telling us, work from home is the thing, work from home is the thing. And I was like, nope, you're never going to make a world-class product unless everybody is in that office for 60, 70 hours a week. And we used to judge startups based on, this was like a little secret, how many cars are in the parking lot on a Saturday, Sunday. VCs used to drive by, hey, parking lot full? Okay, Facebook, that's a good investment. That's over. And you have to compete against other companies. Google is now looking at the world saying, gosh, they haven't made a really big comment on work from home. and they're going to lose their employees to people like Facebook. And that's going to become an existential risk for them. And they will fold when they realize a top developer is going to want to live by a lake in a $2 million, 6-bedroom on 5 acres, as opposed to a $2 million 2-bedroom in a city that's completely dysfunctional, like the worst city in America today, San Francisco.
Hey, Jason, it's Deirdre Bozick here. Just want to switch gears a little bit and talk about Uber, because we had CEO Dara Khosrowshahi on our air not too long ago. And he reiterated that the company is confident that it can get to profitability in 2021. But the company never seems to say how they're going to get there. I mean, ride sharing was heading in that direction, that is adjusted EBITDA profitability. But food delivery is deeply, deeply unprofitable. They just bought another unprofitable player. So just explain this to me. How do they get to that profitability target when they're doubling down on an unprofitable business?
Yeah, it's a great question. So the reason these businesses were unprofitable is because we were in a dogfight. And obviously, I'm still a very large Uber shareholder. I've got a very significant portion of my net worth in it, which wasn't fun when it hit $15 a share. But I believe in the company. And when you're in a dogfight like that, it's not that it's an unprofitable business. It's that you're trying to kill your competitors and you're trying to be one of the last two people standing. And what we're going to see, and we saw it with the Postmates acquisition, which is a sleeper acquisition. What people don't understand about Postmates is that company is loved by their user base, and they have DNA outside of just food delivery. They have an API, the ability for people who want to deliver other stuff to build it into their products. So that's probably why they bought it. But we'll see this great consolidation occur. It's going to be the biggest M&A bonanza we've ever seen in our lifetimes the next 2 years, because tech valuations are up, because the cash positions are so high, and because other businesses, especially traditional ones, are on the floor. And when you have that kind of chip stack discrepancy at the poker table, the small stacks are going to get dominated and they're going to get taken out by the big stacks. The big stacks being the Ubers and the Amazons, et cetera. So that business will easily be profitable once there aren't 8 or 9 people doing investing, which I think the public looks at, oh, it's a money-losing business. Those will become profitable. And if you look at the layoffs that occurred, I think all the big companies, putting Uber aside, had a great moment of, okay, this is a crisis. Let's not waste it. Let's get our staff size down without killing morale, because we have the cover of the pandemic to do that. And so a lot of these companies just hired like crazy. And now they're right sized. The truth is, these companies can operate. A company like Google could operate and have 90% of the revenue with half the number of employees. They don't do that because they're building for the future. So you're going to see that natural attrition and optimization. And we will be sitting here in a year or two, and this entire discussion of, oh my God, ride sharing can't be profitable, food delivery can't be profitable, will look like a really silly discussion.
All right, Jason, want to shift gears yet again. We got to be in 6th gear by now, where all the gears that we're shifting. Talk about this Clubhouse controversy that you are in the middle of. To simplify it, it's Silicon Valley investors versus the tech press. And the argument from the side of you and some others has been, it's unbalanced, it's unfair. The tech press has been overly negative and seeking controversy. I've got a perspective on this that I want to run by you. I think the startup content ecosystem has just changed. 15 years ago, none of the investors cared what the New York Times was writing, because there was Silicon Valley Insider, there was GigaOM, there was TechCrunch, there was paid content. But now you're an angel investor. Al Malik went to VC. Michael Arrington and MG Siegler are investors. Rafat Ali he's an entrepreneur. He started a company, you too, right? So we've moved into this different phase where that kind of Silicon Valley celebrating the startup and the investor blogger culture doesn't have oxygen anymore. You can't make money doing that. And now you need the New York Times to write about you guys. And they're not doing the same thing that those publications used to do. I mean, isn't that really the issue?
It really is a multi-level issue, and I think you hit on some of the themes that are correct for people who don't understand exactly the inside baseball we're talking about. The tech community feels aggrieved that the New York Times only writes about negative things, and there's one layer, which is we used to be this band of loved, radical, world positive, entrepreneurs making cool products people loved. And then this guy named Mark Zuckerberg came. He was a marauder and he did a lot of bad things. And the companies got so big that they really started to have influence, right? And when Trump got elected and people blamed it on, Facebook and Putin buying, anti-Hillary ads, racist ads with rubles, that's when I saw this thing crack wide open. Another thing that's happened during all of this, and the tech industry is sensitive, and I've been a journalist for 20 years and an investor for 10, so I've been on both sides of this. Nobody likes their press, but everybody wants more press, so I get it. And no press is perfect, and human beings who build companies are not perfect, but the amount of power that tech now has, we're sitting here talking about how we're the trillion-dollar companies and we're eating up all of, these traditional companies that don't even know how to compete anymore. They just look pathetic compared to the tech companies' ability to innovate and delight customers. There's another thing that's occurred, and this is what I think is the core issue. And this whole thing got overheated on the weekend to the point at which journalists got harassed, I got harassed, people were getting something called doxed, which means your home address gets published. And I told everybody, listen, everybody's got to take a cooler on this, take the discussion offline. And that's what I'm saying here today on CNBC is, please, let's just take this offline and work out our differences privately. But the core issue is we have a generation of journalists who are coming up who are not John like you or Carl, who believe in capitalism plus democracy. They are socialists. They believe in social democracy, and they believe that capitalism is a force that is bad for humanity. And they are going to get a very rude awakening if they win. Because if you think it sucks to, deal with the government for your education or for healthcare right now, wait until your social network or your transportation is provided by the government. You do not want to live in a world where the government provides services for you and you're dependent on them. And you do not want to watch the United States lose its dominant position in the world because there is somebody right behind us who jails journalists and who puts people in jail because of their religious beliefs. And it's called China. And it's the Chinese Communist Party that America is up against. And these young millennials who believe in socialism, they don't understand it's the road to communism. And I believe in universal health care, but man, this has gotten out of control. The press, CNBC excluded, is anti-capitalist.
I mean, at the crux of this argument, what I heard was that there weren't enough good stories being written, but you said it yourself, as big tech becomes bigger. I know that you're not a huge fan of Mark Zuckerberg, so doesn't it make sense to hold these companies responsible earlier on, especially as they become some of the biggest companies in the world? But I also want to ask you specifically, because a bunch of CEOs and founders, they did take note of the dispute, a few of them speaking out in support of media scrutiny. You had the Redfin CEO, Glenn Kelman. You also had the Basecamp founder, DHH. Do you worry that your role in this and the back and forth could hurt your ability to make investments, to get close to founders and companies that you want to invest in?
100% no. The people who I invest in are capitalists. The people who are taking the other position are social democrats or socialists. So I'm not worried about that at all. In fact, me strongly coming out on CNBC and saying, I believe in capitalism plus democracy, not socialism or communism, makes me the most attractive place to come for getting a check as an early stage investor. It actually has built my brand, is that I'm pro-capitalism. And I can't believe I'm sitting here on CNBC defending capitalism. I mean, that's the point America has gotten to, is that we actually believe socialism and communism is a better operating system. It is not. We've just gotten soft as Americans where we, for some bizarre reason, think that capitalism is bad. Now, there should be absolute scrutiny on all of these companies. But when I talk to journalists today, they are calling me, this terrible thing happened at Uber. This terrible thing happened at another company. Comment on this terrible thing. Comment on this terrible thing. When I come on CNBC, you always balance it. Hey, tell me about something new and exciting. Oh, hey, there's some problems at this company. It's the percentage of coverage. And if you look at the New York Times, and it doesn't take a genius to do the math, just look at 20 tech stories. 18 or 19 of them are going to be just the bad story on tech. And I say to them, hey, would you please cover calm.com and what they're doing for mental health? Please cover Blockable and the affordable housing we're working on. They're like, I can't get that through my editor. I have to write about Mark Zuckerberg. I have to write about Palantir. I have to write about how terrible this person is. And you know what? We're tired of it on our side. And we're just going to route around the press. That's what's happening in Silicon Valley. We're now getting follower accounts on Twitter that are greater than the journalists. And that's the other underlying thing here. The tech industry killed the news business. You look at Craigslist, they absolutely decimated classifieds. Then you look at what Google, the duopoly of Google and Facebook did to ad revenue in newspapers. And newspapers peaked right as the internet emerged, and it went straight downhill. So we have to have a very nuanced discussion about the importance of a free press, which I spent 2 decades of my life in covering as a journalist, and maybe just calm this beef down a little bit. And all I'm asking for is a little balance. If you want to beat us up and you want to criticize us for 4 out of 5 stories, go for it. It only makes us better at what we do. I am absolutely open to criticism. Every time I come on this program, I get a massive amount of criticism. I get to tweak my game a little bit. I take it to heart, and I try to make my game, what I do every day in investing in companies, just 2 or 3% better every time. But I would love it if the New York Times would just cover 1 or 2 world positive companies I invest in. Out of 250 companies, 2 or 3 of my companies have stumbled and deserve criticism. What about the other 247? Can I get a profile of a company doing something good? That's all I'm asking for. Please, some balance.
Balance in the media is something we'll always deal with. And in terms of capitalism, Jason, I mean, I don't need to tell you the inequality that's been created that Jay Powell comments on in his testimonies, and the way in which central banks have co-opted a lot of activity is why you're hearing complaints. And we'll talk about more about that next time. We need to have that nuanced discussion. And
I'm all for raising the minimum wage. I'm for universal health care. Let's have those discussions without just vilifying the tech as the enemy.
Jason, thanks. It's always great. We love having you kick off the hour. Jason Calacanis.
Thanks for having me on. I appreciate it, everybody. Stay safe.
Well, talk about surge pricing. Shares of Uber and Lyft are surging this morning as California passes Prop 22, meaning drivers will be able to remain independent contractors and not employees. Early Uber investor and founder of Inside.com, Jason Calacanis, joins us now. Jason, I'll bet you're as subdued as ever about this, but really, this was not nearly as close as the polls suggested. I mean, 58% is pretty resounding. We got the concession on this pretty early in the night. Do we now move on to figuring out how these companies can make conditions and safety nets better for workers?
Yeah, absolutely. And, I would like to thank the media for doing such a great job covering what is obviously a little bit of chaos today, and for the American people to be patient and get every vote counted, because everyone does count. Prop 22 is really a parallel to what we're seeing across the country and Trump's absolutely shocking and outstanding performance. We heard Roger just talk about it before I came on air. How is this possible that Trump got all these votes? Well, I believe that there is a war going on within our country between rural voters who would like to live their lives and not be told how to live those lives, and an emerging hysterical socialist left, and which we sometimes refer to as coastal elites. But those coastal elites actually do not agree with the hysterical left. And they don't want to tell people how to work. And what Prop 22 did was, and the reason why 70% of drivers didn't want it, is they wanted to force people who very much enjoyed picking their own hours and making arguably $15 to $30 an hour in the face of having other choices like working for McDonald's for $10 an hour. McDonald's forcing and fighting tooth and nail for decades against a minimum wage increase. Or the fact that Amazon and Apple had to raise their minimum wages to $15 an hour to compete against gig work that DoorDash, Postmates, Lyft, Uber, and many other companies had put out there that was so much more compelling to the average American as an entry-level job or as a side hustle, a way to make that extra $100, that they voted unanimously that they do not want the government telling them how to work. And they don't want to show up in a uniform and work at McDonald's from 5 a.m. to 4 p.m. and not put their kids through school or drop them off.
How do the companies make it better from here, though? Because yes. This is a repudiation of the state saying we know what's best for everybody here. This is direct democracy. People saying no, here's what we want. But there's still this issue of safety net. We saw it happen during COVID when so many drivers were not able to have those fares and those rides. I mean, we're still in this period. I shouldn't say during COVID as if it's past. There are a lot of possibilities that your Dara Khosrowshahi's and others, Tony Xu, have put forth for ways that workers could be protected. How quickly does that move forward at this point?
One of the great things about this split election, where it appears Biden's going to win by just a hair and we might have the Senate go slightly to the GOP, is that these people we sent to Washington are going to need to get together and look at something like the minimum wage, which has not changed since 2009, $7.25. Australia has I think a $14, $15 minimum wage at this point, the second highest in the world. And companies, tech companies specifically, are leading the charge. Amazon, which is derided and they want to break it up, has a $15 an hour minimum wage. Uber, run really exceptionally well, is putting money into people's safety net. What we're building in the technology industry is a second safety net. There's already a safety net: unemployment, welfare, food stamps, all the different programs we have in this country paid for by taxpayers. What the gig economy did, and boy, are these idiot politicians in California who are destroying the state and driving the top leaders out of the greatest state in the nation. It's not the greatest city, but it is the greatest state with the greatest coastline, the greatest weather, the greatest technology. These idiots are driving people to Texas, Nevada, and Florida so that they can have more freedom to run their companies and not have these idiots, these absolute incompetent idiots. Tell them how to run companies. And we are doing a better job at leadership than they are. And it's infuriating. And that's why they lost. And that's why Trump is so close to winning. Sorry, I'm very upset about it.
You mentioned... Okay, bringing you back to the topic at hand, you did mention minimum wage. I do think it's worth pointing out that in Florida, there was a vote to increase the minimum wage. But I want to ask you specifically about Uber. Of course, you're an early investor there. I think it was interesting that Uber made adjustments to the app ahead of the vote to make the app more of a marketplace. And then there was just a report out from Morgan Stanley saying that Prop 22 could give Uber an advantage in the competition for driver supply because it is the larger app, the larger player, and the argument now that you could see more drivers concentrate their hours on Uber. How do you see Prop 22 impacting the competition between Uber and Lyft and impacting these companies in perhaps ways we may not have anticipated because there was just so much of a focus on whether or not 22 would pass or not?
Yeah, I mean, it's a great question. This has been a super overhang for literally, I don't know, every year after the second or third year of Uber, when they started to be so successful and they started to spread like wildfire. When you add these regulations, whether it's regulating social media, it basically pulls up the ladder for competitors below because the companies with the most money, the biggest war chests, get to defend themselves. So all the regulation would have done, part of me was like, wow, this would be pretty great if Prop 22 fails, because then Uber gets to say, you're all full time. You work the hours we want you to work. We're lowering the rate you're going to get. And you got to wear an Uber logo and T-shirt, and you got to drive a certain type of car. It would actually standardize the process and make it less of a marketplace. When Travis started the company, I asked him, hey, Travis, why don't we give everybody an Uber shirt, or why don't we provide them with car washes? Because I would get friends who'd be like, I just went into an Uber. It was dirty. And he said, Jason, it's a marketplace. We cannot exert how they deliver the service. Once we do that, they're employees. Well, guess what? If you make them employees, we at Uber, unless I'm saying I'm a small shareholder now, but Uber could then say, you know what? You can't work for Lyft. You can't work for DoorDash. You can only work for Lyft. So then to the person on top who's got the biggest... That's what would have happened. So Uber wins either way in this. But what's most important is a vibrant competition. If you want to fight the real enemy, Walmart's paying people $11 an hour. McDonald's is paying them $7, $8, $9, $10 an hour. Let's start there. And let's start a program within the greatest country in the world where we raise the minimum wage 5 to 10% a year
Florida,
for 5 straight years.
Yep. Florida started that process, Jason. But, there are still those who believe this is not about telling the companies how to run their employee base. It's about those laid off drivers who filed for unemployment, that you and I paid their benefits because the company never paid into the pool, and that it's just labor arbitrage. Okay, guess what? If you're a real estate broker, if you're a freelance writer, you have freelance journalists, I'm sure, who work at CNBC. Poor Vox, an up-and-coming, media company, had to lay off or fire every journalist in California because of these idiot, absolutely incompetent, backers of these type of AB5 programs who said, you can't have freelance journalists anymore. And you know what we need to do? We need to let Americans decide how they distribute their labor. Pre-pandemic, we had the lowest unemployment of our lifetime. Look at the free market. Look at how it's operating. If we have the lowest unemployment and wages are going up for people in that bracket, and Walmart, it has to raise to $11 to compete with Amazon, who's at $15, they're reacting. And even Apple, who had a disgracefully low store price, hourly wage for their store employees, and they got absolutely admonished for it, and rightfully so, since they're so unbelievably profitable. Everybody has to compete for that class of employees. There is no loser in a vibrant, competitive, entry-level market like this. Right. People are choosing that they want to drive 4 hours and be able to pick their kids up and take them to soccer. Well, because working an 8-hour shift sucks. And having to wear that uniform sucks.
That's how free market capitalism is supposed to work. And I think we can all acknowledge it needs some guardrails, but not necessarily.
And that's the minimum wage. Yeah. So let's all work on that instead of picking one company because you don't happen to like them.
A lot of people disagree about the minimum wage, but that's for another day. Jason Calacanis, thank you.
Okay, a little bit. Give them a little bit on the minimum wage.
All right.
$7 is ridiculous. Let's go to 10 and just call it a day. Let's start somewhere.
All right.
Disgraceful.
Good to see you, Jason.
We are back in one market in San Francisco in just about 24 hours, not too far from here. Apple is expected to unveil 3 new iPhones, the event coming as the stock has sputtered. We're joined now by angel investor Jason Calacanis, along with the investor Dan Niles. Dick Costolo, of course, is still with us. And the big news, Dan, nice to see you. Jason, good to see you as well. Thanks for being here. Is the move you made in the stock just a couple of days ago.
Yeah, I mean, I wouldn't call it that big a move, but we were along the stock.
You're short Apple.
Well, yeah, but this is the way I look at it. The stock's up over 35% for the year. But look at the financials. The revenues are up 1%. The earnings are down 5%. And these new phones, the big innovation is we might get a purple and green color. Wow, that's exciting. And there's no 5G on the phone. You're going to get a better camera, but the cameras we currently have are pretty good, and maybe you can charge some other products. So for us, it's a small position. You have to remember, we're actually very long the supply chain for Apple, where you've had Apple burn a lot of inventory over the past 6 months. So one of our largest positions is a company called Lumentum. They provide the lasers for Apple, and that stock's trading at about 12.5 times earnings, and we think that's a huge runway for them, regardless of Apple.
So what turns you more bullish on the story then?
I mean, quite honestly, if you look at the big trends in tech right now, what do you have? Well, you've got 4.5 billion people on the planet out of the 7.5 billion people who already have cell phones. The improvements you're getting are very incremental. And last year you had smartphone unit sales decline for the first time since the iPhone was launched. So you're talking about a very slow growth market for a product that's over 50% of their revenues, and they're at the high end of the market. So until they get a 5G phone out, and that's going to probably come next year, it's hard for me to see somebody running out and spending $1,000 so they can buy a purple phone and with a better camera. So for me, Apple, it's had a great run, great buyback, obviously, great dividend. But, the big moves we made last week, quite honestly, is we shorted the bonds, and we bought Silicon Valley Bank, which is down 39% year to date. We bought Lincoln Financial with a 6 PE that's down 22% 3% or so year to date. And we think the financials actually, and that trades at a 6 PE, we think those are some of the more interesting spaces of the market where these stocks have gotten absolutely killed. And if we're not going into a recession, you're going to have a big bounce in the financials. And so those were the big moves we actually made last week.
What, Jason, does Apple need to do, in your estimation, to get an investor like Dan Niles more excited about the story?
Yeah, you got to fire Tim Cook. It's a disaster. I mean, I think they haven't done anything innovative since this device, which is magical. The iPods are
I thought
amazing.
you were joking.
No, I'm being dead serious. I think it's time for him to pass the baton because listen, Steve Jobs passed away. The phone has been in decline since. There's no reason to upgrade your phone. So peak phone was, what, 2015? And it prints money, sure, but the major problem is they believe that any company that innovates out there is not as good as theirs. They need to watch what Zuckerberg did with Instagram and WhatsApp and what Google did with Android and with Instagram. Dan's going to buy back into the stock if they buy Tesla, if they buy Peloton, if they buy Spotify, and they start putting that $200 billion to work. Yes or no? Yes or no?
Well, I mean,
if they had that, if they put Peloton in every store, would you buy?
I'm not a I like my Stairmaster.
The broader
anyway.
point that Jason's making.
But the point he's making actually has a lot of validity to it, in the sense that if you think, the one thing I will say Tim Cook has done better than any CEO is deal with the current administration. And so he's put his personal feelings aside, obviously openly gay man, highest profile CEO on Wall Street, and he's done a great job dealing with the Trump administration. So more than any other CEO, you have to give him a lot of credit for that. Now, on the innovation front, I completely agree with them. It's something I've said before. Apple, since the passing of Steve Jobs, but to be fair, he's a once-in-a-generation, maybe somebody like an Elon Musk that you're going to see.
What's the stock really up? Isn't the stock up 250%? Yeah, or I forgot what the number is. That number may be wrong. My point is, though, the stock is up a lot.
That's because they're extracting so much money from their loyal fans. The margin on this is $150.
And don't forget, they have a huge buyback. They have a massive dividend. And so that's great that the stock does really well right now. But if you're looking out for this company over the next 2, 3, 5 years, once that buyback starts to peter out and that balance sheet starts to wind down, they're not innovating that much. They're 1 year behind Samsung on 5G. When you're trying to have somebody cough up $1,000 for a new phone, I think that's a big deal. So, I think the stock's going to actually do relatively well between now and when they have to report the fourth quarter. If you think of last year, right, stock did great for the first 9 months. Then they had to sell 50% more phones in the fourth quarter. And I was on your show in August saying I think Apple's going to have a huge problem because people are worried about China, yet they're somehow not worried about Apple that's got high teens percentage of revenue.
$20 off the high.
Yeah, but that has nothing to do with what Jason's talking about in terms of innovation,
What got you here will not get you there.
Yeah,
and that's their core
point.
problem. They are resting on the laurels of Steve Jobs' legacy. They need to put Tim Cook in another position, get Elon Musk in there, let him run the company. Find somebody like that, somebody who is maniacal about product. I mean, let's just sit here and realize that iPods are the greatest headphones ever made, and that's the greatest thing they've done over there in 10 years. It's a disaster. And if they take that store footprint and they put a Model 3 in every one, if they put a Peloton tread in there, and I've been using the tread, it is exceptional. Peloton is the Tesla or the iPhone of sports equipment. It would go gangbusters. They would go from 500,000 Peloton subscribers to at least 10 million. That's the type of acquisition you need to make if you're going to compete. And they just have way too much pride. They think that they make the best products in the world and nobody else can. Incorrect. Tesla, Peloton, Facebook, Google, all making wonderful products right now. The Pixel 3 with Google Fi is a better experience than the iPhone. I have both. I use both. I've used every version of both phones. The Google Pixel is a better phone.
Do you agree with this or you disagree?
I just think there's a huge opportunity around Apple TV and combining what they've built there with a streaming service that would give them an enormous competitive advantage over the other players in the streaming space. Well, and I just is it coming in the next couple of weeks?
This is what I would say with regards to that. I think Apple TV is going to be a humongous disappointment, and this is why. Why do you get a TV service? It's for content. Now,
you were asking me that as a question.
Yeah.
I was stumbling there for a while.
Why do you use the television?
Now, here's the thing, right?
Niles answered his own.
Yeah, exactly. But there's this little company called Disney that's coming out. And they plan on bundling Disney along with ESPN, along with Hulu for $12.99 a month.
Game over.
They are going to absolutely crush everybody else who's trying to launch a streaming service, including the incumbent Netflix. If you're them, you've got a rather big problem on your hands.
Well, their stock has shown that.
And, well, the funny thing is Netflix's subscribers in the U.S. declined sequentially for the first time in a decade. That's without having Disney in there pushing their content. So you look at Apple and you go, well, where's the big store of content that they're going to have? Now, the good news is they have an installed base of 900 million iPhones. They have 1.4 billion devices. There's going to be some set of people that do say, okay, I'm going to buy that.
I haven't heard anybody on this desk talk about the services business.
Yeah, but the reason is the services business is 10%
in and of itself.
The services business is 10% of revenues. Yeah. iPhones is 50% of revenues. There's a reason why revenues are up 1% year over year and earnings are down 5%. It's great to say, well, don't look at this. Go look at that 10% piece. Well, yeah, but that 10% piece isn't big enough to move the needle. Now, wearables is, I think, 19% or so of revenues. That's growing very rapidly. But again, you have to look at this in total. Yeah, the stock's done well, but it's not what it's doing to this point. You're looking at this and going, all right, there's a big gaping hole between now and this time next year when they have a 5G phone. I'm looking at a company like Activision, which is changing gears. You're going to see Microsoft, Amazon, Google all launch game streaming services. And if you look at a tweet I put out last week, I've got 2 nerds living in my basement. My wife prefers to call them children. But, you know, they were all geeked up about the new launch of World of Warcraft coming, right? And we're in Hawaii surfing, and they're like busy making names for the World of Warcraft launch, right? That's gone from 12 million subs to less than 3. And this whole free-to-play genre, everybody's heard of Fortnite, PUBG, that started in the beginning of 2017. That's crushed that whole sector. I mean, Activision's down 34% from its 52-week high. Now, what happens with streaming, though, is you go from being able to play games on your console. There are only about 50 million Xboxes, PlayStations, etc. sold last year, to all of a sudden, if you can play that on the 1.5 billion smartphones sold every year, that becomes much more interesting. And Call of Duty, which is the big Activision game, that's expected to be able to be played on mobile coming up soon. So those are things that are interesting. There's a lot of content from those games.
Yeah, I just think Apple TV will not exist in 5 to 10 years. Not the hardware part, but the subscription. They'll cancel that service. They have no business being in that. They're horrible at content. And their whole concept of, like, not doing edgy content in the age of Succession and HBO battling it out with Netflix to see who could be more edgy, and AMC. It's just a disaster. They need to really rethink everything. But the subscription revenue, we're seeing many startups in Silicon Valley. Calm.com is one of the ones I invested in. We own 5% of that company. They're going to do $160 million in subscriptions this year, and they fork over 15 to 30% of that to Apple. That is a very real business. It may be a slow burn, but it is the future of consumption. People don't have to make a cognitive decision to buy a product. They can just subscribe and cancel at any time. That leads to a lot of sampling, and it's going to be a ginormous business.
I mean, quite honestly, if Apple bought a content maker, like, I mean, if you think about the streaming services coming, you've got Disney, obviously the juggernaut in the space. But Comcast is coming as well. They own NBC Universal, right? Obviously a lot of content there. And then you have AT&T launching their own streaming service. They own Warner, which obviously Harry Potter, etc. And so you look at all of this and you say, well, what's the big content that Apple owns?
No idea.
And you go, well, if they bought some of these media companies that are now trading at like 6 times, earnings, which given Apple's trading at about 17 times, you go, okay, at least you could make the argument, we've got some interesting content that people might want to watch. Right now they're doing one-off deals with some,
people
like Oprah and Steven Spielberg.
And this goes back to the first point about them having no audacious nature in them to buy things. Iger was like, you know what? Pixar, Marvel, I'll take it all. Star Wars, I'll take everything. They don't have to, they don't sit in there going, oh, you know what, Star Wars, we didn't make Star Wars. Oh, we didn't create the Marvel universe, therefore we can't buy it.
That's why we own Disney. We love that. They're going to be the winner in streaming.
They have $200 billion. What are they doing with it? They bought Beats for $2 billion. I mean, Zuckerberg paid $19 billion for WhatsApp. That was, I think, 20% of the company at the time, or 15% of the company. Can you imagine Apple making a bet like that? Of course not. That's why you have to take the guy in the seat who's been a great steward for 10 years and move him out. and put somebody in there who has the guts to buy something.
Provocative thoughts, as always. I would expect nothing less from Jason Calacanis. He's going to stick with us. Dan, thank you for being here. Great to get your insights on all things tech. Dick Koslow is going to stick around as well. Coming up, big tech under fire. U.S. states taking aim at Google. An antitrust announcement expected in a matter of hours. How the Valley is preparing for regulation. Halftime report back right after this. About 90 minutes from now, about 30 attorneys general are expected to announce an antitrust investigation into Google. Our Ilan Moy joins us from the steps of the Supreme Court, where that announcement will be made. Ilan.
That's right, Scott. We're expecting this announcement to come at 2 p.m. right here in front of the Supreme Court, and have now been able to confirm that nearly every single state in the country will be participating in this antitrust investigation against Google. The one notable exception is California, Scott, where you are, and of course, home to Google's headquarters. Now, that's according to a source familiar with the case. The California State AG's office has sent me a statement that says the state remains deeply concerned and committed to fighting anti-competitive behavior. Now, the state that is leading this case is Texas. The attorney general there is Ken Paxton. He's a Republican, and he's indicated that this case will center on three big questions. One, is Google stifling competition? Two, is it restricting access? And three, is it harming consumers? I'm also told that the investigation will include a demand that Google turn over documents related to its advertising business. Now, for its part, Google has already released a statement preemptively saying that its services help people create more choice and support thousands of jobs. So clearly, Scott, this is not Google's first rodeo. Fortunately or unfortunately for the company, they've grown well accustomed to these types of investigations, both here at home and abroad. Back over to you.
Yeah, Ilan, thanks so much. That's Ilan Moy outside the Supreme Court for us. Okay, the gang's all back. Jeff Richards is back from GGV. Your industry's under fire. I don't know how else to say it. What are you all thinking about it? Jeff, you first.
Yeah, I mean, I think the point that Ilan made about, is it better for consumers? I mean, there's no question our lives are better because of Amazon, because of Google, perhaps because of Facebook. The question that I think comes back to is, are we stifling competition? And that's where it gets challenging. You have 90% search share. You have a dominant position in maps. You own a lot of the advertising infrastructure in the United States. So it's a fair question, but I personally feel like my life's better because of Google. So it's hard to then wind back the clock and ask about those other factors.
I feel like the regulators always, fight the last war. I'm not saying anything. I don't think I'm saying anything original here, but they went after Microsoft when Microsoft, at least for those of us out here, felt like much less of a threat. They're going after Google now when there are plenty of other areas of tech that feel like they're monopolies. Certainly Facebook owns the social graph and decides who can and can't have access to that via their APIs, et cetera. The App Store is, as Jason mentioned earlier in the show, you got to pay the VIG. You got to pay the 30% on any subscription that goes through there. If there was a competitive App Store, the App Store wouldn't be able to charge 30% on subscriptions. So I just kind of feel like the regulators once again are going after yesterday's issues, and there are bigger issues facing the competitive landscape.
You're not being dismissive, though, about some of the self-inflicted issued that need to be dealt with one way or the other, are you?
100%. So many of these things are own goals. There was an advertising issue raised the other week by the folks running the new Brave browser about hidden pages that Google Ads was surfacing to making sure data was passed between advertising partners. Those things are own goals and self-inflicted wounds that the folks out here just have to get smarter about.
The one thing I'll add, and then I know you're going to jump in with something aggressive, but
my reputation precedes me.
Yeah, exactly. But think about where Google, Amazon, Facebook are dominant, particularly Google and Amazon, is in the U.S. 300 million people in the U.S. There's 7.3 billion people in the world. What happens as the next billion come online in Latin America, Southeast Asia, India, Africa? Do we want Google going after those consumers, or do we want to hand the keys to those markets to other tech companies around the world? I think that's got to be part of the equation as well. It's not just about the U.S. as we have a global market now.
Yeah, I just think historically you would buy on an antitrust investigation because it means the company is truly meaningful, and there's no way anybody in our government can take these success stories and ankle them in the face of China picking the winners, right? I mean, we have TikTok, the first Chinese company that has hit any type of scale in America on our shores. Why we allow them in our country when Twitter is not allowed in China is beyond comprehension for me, and you can be sure the Chinese government has access to those microphones and cameras of tens of millions of Americans using TikTok. Putting that aside, I think there's one of two outcomes here. One, they put Google in the penalty box, and maybe it impacts revenue in the low single digits. And the way that would happen is because Google has been so aggressive in pushing down the organic search results and putting their own services above it, and they put 5 or 6 links up there that you can't tell are ads. So if the antitrust people would like a place to look, put 100 consumers in front of a Google search and say, tell me what's ads and what's not, and 60 or 70% of them will not know the difference, and that's where they could really hurt Google, 5 to 10%. The master play for Google is to say, you know what, you got us. We're going to spin out YouTube. We're going to spin out Nest. And that will create more shareholder value, because those assets unleashed outside of Alphabet would do even better, which is why they set up Alphabet to begin with. Alphabet being set up as a way to distance Larry, who does not want to speak in public. When's the last time you had Larry on the show? Oh, never. He doesn't talk publicly. He is not available. Something's wrong with his throat. He does have a thing, but he is not available to talk about it. They've been very smart about architecting this company so nobody's in charge and nobody knows where the bodies are buried.
Let me ask you about Facebook. Koslow says monopoly on the social network. You know, Jeff enlisting, my life is better off with Google. He used the word perhaps when talking about Facebook. How do you see Facebook?
Well, Facebook is really the cause of all this. They were the first company here in Silicon Valley to really abuse the customer base at an audacious level. And then they did something that was really distasteful here. They treated other entrepreneurs like the Chinese companies and entrepreneurs treat America. In other words, they had no respect for intellectual property. And that has made them so loathsome and hated here in the community by taking everything that Evan Spiegel did with Snapchat and just stealing it like a photocopy. And they put the target on their back. And then for Zuckerberg to come out and say, like, oh, it's ridiculous that an election could be swung by our services, while the sales team is embedded in Trump and Hillary and everybody else's campaign with sales documents saying, we'll help you win your election. And then Zuckerberg says it's not possible. It's that kind of arrogance that Zuckerberg has that has led to the government having to do something. Now, what can they do? Can they get them to break up and sell Instagram or WhatsApp? I don't think so, but they're not going to let them buy the next ones. And that's really, I think, the existential risk for Zuckerberg, is he has been such a bad steward of that company. He has been such a bad human being in how he's treated his own users that he needs to be stopped. And if we didn't have Zuckerberg in this ecosystem, people would look at tech a completely different way, I believe. And they could solve the entire problem with one simple product innovation. If you logged into Facebook today and it said, would you like to subscribe to Facebook for $8 a month, $60 a year? Then they would have the air cover. They could just say, you know what, Dick and Jason, Scott, you all decided that you don't want to give us your data. You're a subscriber. We collect none of your data.
Do you think
then that would solve the whole problem.
Do you think Facebook is truly on top of the issue of data privacy at this point?
They're a disaster. I mean, the whole concept was to move fast and break things. Congratulations. You broke the democracy. You broke people's privacy. That was their explicit goal. And that's why I think if you look at a lot of the problems we have here in Silicon Valley with the black eye, with people looking and not trusting us anymore, it really goes back to Zuckerberg's approach, which was put a product out there, let the chips fall where they may. And that really is very hard to compete against. If Twitter decides, let's be judicious here, let's check the ads before they go up on Twitter. And Zuckerberg's like, check the ads. No, that's friction. Just put the ads up. I don't care if it's in rubles. I don't care if it says Hillary's a racist. Just put that stuff up. That's what they did.
Well, look,
it's hard to say anything after Jason that doesn't sound equivocal, or meek. But Ben Thompson, sort of a thought leader, if you will, out here, wrote a little while back that the way to think about going after or regulating these companies should be different in each case, not blanket same way across the broad brush. And his thought on Facebook is, they probably shouldn't be able to be allowed to buy other social networks like Instagram, for example. I think that's probably at least an interesting idea, his way of thinking about you have to treat these companies differently when you think about regulating them.
I would just add that to Jason's point, if you look at the reaction to Libra, which is Facebook's kind of toe in the water in the cryptocurrency blockchain area, it's been fairly negative in Washington, D.C. and sort of a...
Fairly?
Yeah, well, okay, very.
What could go wrong?
I mean,
right, we're going to create our own currency.
Congress people,
but I think that's an indication that the government realizes they probably waited too long on some of these other fronts. And so the reaction to Libra has been pretty negative.
Hey, Twitter's not out, a shining beacon on the hill in some respects as well. I mean, people describe it as a cesspool at certain points for the discourse that it puts forth as well. There are, issues that exist with that service too. How would you handle that today if you were still running it?
I think that these CEOs and leaders of these companies, and I know Jack and the team there think about this stuff all the time, have to do something that's probably to date been would make them cringe, and that's you have to start treating all these accounts differently, meaning that you've got high authority accounts like, I don't know, newspaper accounts, New York Times, New York Post, pick your publication, that may be allowed to tweet things that a user who just signed up yesterday and has 0 followers shouldn't. So, for example, I'll give you a quick example. Back when I was CEO, ISIS notably assassinated some hostages they had captured. They tweeted photos of the assassination, and we said, okay, any account that tweets these photos out, it was mostly ISIS accounts at the time, we'll suspend them. You can't tweet photos of people being executed. The next day, or not the next day, a couple hours later, I think it was the New York Post, tweets out what is the cover of that evening's New York Post, and it's the photos of these guys being executed. So now you're like, okay, well, now what do we do? I just think that these companies can't treat all accounts equally and consistently, and have to start thinking of different tiers of accounts, and accounts that have just signed up and have no followers and no avatar and haven't sent their phone number in, maybe shouldn't be allowed to reply in real time to leaders of the world and high authority accounts on the platform, et cetera, or at least have those things only be seen by their followers and not everybody. That's, if you tell the CEOs of these companies this thing, like, oh, great, I have a hard enough time now, I got to start thinking about treating these accounts differently. But I think that's probably the way forward, as hard as that is.
Last and quick.
Yeah, no, I would just say, I think if you look at Twitter, it started as a free speech experiment, and we were all very pro that. But when you hit scale, things change, obviously, and I think that's a really illustrative example with the assassinations or the murders. Why not just make everybody verified and just say you have to have a real name like Facebook does? And if you don't choose your real name, if you don't verify, then you're going to be part of this underbelly that people have to opt in to see. Now, the reason they wouldn't do that is they're a public company, and then they're going to go flat for 3 quarters, and then you all are going to give them a hard time, and their stock's going to collapse. And that is really the problem and this reason why companies are staying private longer, and why we have this issue that we've been talking about for months about these companies waiting too long to go public. They're waiting because they can't take dramatic action like this without the stock getting cratered, and then all the employees are underwater.
I think it's as most things are, and people don't like to hear this, but it's more complicated than just verifying all the accounts. You've got people who are under political pressure in lots of countries outside the United States where you're not allowed to speak freely, like Tunisia, where the Arab Spring really started and swept across North Africa. Those people were all tweeting under assumed names, and that's how they were able to organize and protest without the government knowing, like, that's this guy who lives at this address, let's go tie him up before the protest. So it's more complicated than that. There are also people who can't verify their accounts because they don't have their permanent phone numbers, etc. No, I don't think you can ban the President of the United States.
Even if he's abusing people.
It's not Twitter's problem that he was elected president. He's a president of the United States. He has a platform to be able to say what he wants to say, whether irrespective of
no matter what it is.
I just think you can't. It's not Twitter's
any elected official for that matter.
Yeah, I just don't think you can ban the president of the United States from the platform.
Wait, so if an elected official is a racist and starts publishing,
official is the sheriff of Washtenaw County in Michigan, that's a different thing than the president of the United States of America.
Got it.
Again, I just don't think you can. It goes back to my point. I don't think you can have a terms of service that says we treat every account equally. It causes these companies to have to jump through hoops and twist themselves into a pretzel, and you see that with the way people think about, well, this Trump's tweet XYZ didn't really break this rule for this reason. I just think you should say, look, we're not going to do anything to the President of the United States account. He's the President of the United States.
All right. We'll get final thoughts from you after a quick break. Gentlemen, thanks so much for being here. Jeff Richards, GGV. Jason Calacanis.
Good to be here.
Calacanis Incorporated. All right, we'll be right back.
And it is time now for an old-fashioned Squawk Alley feed. Although today the segment could really just be called Reading Jason's Twitter feed. He is nothing if not outspoken and controversial. Angel investor and Inside.com's Jason Calacanis is back with us. And Jason, let's start out with one of these tweets. Peloton last night, a prediction that they will launch or buy 3 new products in the next 3 to 5 years, grow tenfold from there, and become the Amazon or Apple of gyms. Jason, doesn't Apple want to become the Apple of gyms, as some have speculated?
Well, thanks for having me. And I just wanted to say on 9/11's anniversary, thank you to all of the families who made that sacrifice that day, and specifically my little brother Josh, who retired this year as a firefighter, and his second or third call as a firefighter from Williamsburg was 9/11. And so a lot of time has passed, but I'm still in awe of those firefighters who made that sacrifice on 9/11. Putting that aside and making a hard shift to Peloton, I am a huge fan of this company, and I think it has Netflix-like potential. Maybe not in the number of users, but I do see a world in which they're going to launch, I think conservatively, 6, 7 products. There are 2 products that are super obvious to everybody. One is called Robot. I didn't hit that as a private investor, but that's a rowing machine. That is essentially Peloton for rowing. It's an easy acquisition for them to make. But they probably just will build their own. It'll be easier for them to build, given what Peloton knows. And then there's a unit called Tonal, Tonal. Also, I'm not an investor in that company, but I had them on my podcast, and I'm addicted to that product. And what these products represent is essentially the end of a company like Equinox or any of these gyms, because they've made a product that is just such a fabulous value proposition. And not only is it a better product and a better experience, it's a better value. And so, these devices will all be in the $1,000, $1,500 range, as we saw with the Tread 2. I have the original Tread, which was way overpriced at $4,000 something. But at $2,000 and $1,500, eventually it'll be a gangbusters. But they'll come out with an elliptical, a weight system, like a pulley system, like the Tonal, a robot. And they'll probably have like a mirror type, portrait panel. And we'll see the million subscribers go to 10 million. I haven't personally bought Peloton as a stock, but I'm going to start buying it over the next year or so. I'll be selective because the market's pretty hot right now, and I do think there'll be a correction at some point. And it is really got tailwinds because of people leaving the city and having larger homes as well. So, I live in the suburbs now. When I lived in Manhattan, there was no way I could have, more than one of these machines. But when you start to move out to the burbs, like people are doing, you can have 3.
You don't buy one of anything, do you? You got multiple Teslas. You're now looking at multiple.
I have all the Teslas. Yes, I have one of each.
So you say that you expect a Peloton to come out with multiple new products or acquire them. When you look at Tesla's valuation, and when you look at the currency that they now have to go out and do these kinds of things, what do you think would be smart? I was, kind of pushing on the software and beyond just services, media-driven services right now, because really what people want is the ability to control and customize their exercise experience.
Yeah, I think there's an opportunity for somebody to roll up a lot of players in the space. That's a great observation, John. Robot and Tonal, those 2 systems were easy to buy, but Peloton's very good at building product. They have like that Apple vibe where they just know how to build beautiful products. So it would be very smart for them as a blocking strategy, I think, to buy Tonal now and to buy Robot now, so that nobody can sort of work backwards into the Peloton space. So I would do it as a blocking strategy. And then we've invested in a lot of private companies. Calm.com, the meditation app. Steezy is a dance app. And Fitbod is a cross-fitness app that doesn't use dedicated hardware. You use whatever hardware you got, including like push-ups and sit-ups and your own body weight. And all of those businesses are doing, tens to hundreds of millions of dollars a year in revenue. So I think with the SPAC movement, you're going to see a lot of those go public. And really, who loses is what you always have to ask. Where is this money coming from? I think that this is the new cable TV, the new DVR, the new PC. Every home will have one. And when you start looking at how brilliantly Peloton has priced this, when I go down to my Peloton now, I see not only my wife and I logged into it, but I see my parents and my brother, when they come to spend time with me in California, and they have accounts now. So I'm infecting them. We call this real world virality out here in Silicon Valley, over the shoulder virality. You take an Uber with somebody and then you download the app. So that is starting to happen for Peloton. So I think their customer acquisition cost is going to go down. And the prices for the hardware are going to go down, and then they'll stay at that $40 a month, which is absurd value for a family to have a $40 subscription.
Jason, Silicon Valley virality, though, is not exactly the real world. I think Peloton still has some ways to go in terms of pricing, certainly to be in every home, like cable or satellite TV. Jason, but let's move on, because I also want to get your thoughts on Nikola. I'm sure they are just as interesting. Your too soon Soonicorn rule. For some, I've heard that. Soonicorn, unicorn with...
Yeah.
Yes, and so that's a reference to Theranos. You say that if a startup becomes worth $1 billion before they launch their product, they're either going to fail or become a fraud. And of course, this follows Trevor Milton's response to activist short seller Hindenburg, which accused the company Nikola of being the latter. Okay, break it down for us. What is Nikola here then?
So I had
at a $12 billion valuation, I should add, much more than one.
Yeah. All right. So I had Trevor on my podcast, and he was very honest, and he spent, I think an hour and a half on the pod talking very specifically about their plans. And there's a possibility that he'll hit some of these targets. I don't believe that companies should go public before they have product market fit. We've seen this a couple of times recently. Quibi, they were over $1 billion when they before they had their product launch. Obviously, Theranos comes to mind, and Magic Leap, the AR company in Florida, has had CEO turnover, and their product is, we're still waiting. So it's just it is a red flag for us in the Valley. It doesn't mean it might not work out. It might work out, but I think what retail investors need to know when they buy into something like Nikola is that they're paying a price that's 100 times what private company investors like myself pay for companies that have the same level of product market fit. And that means, I'm not sure how you get a return on investing in an $11 billion company that's probably arguably worth, a couple of $100 million, $200-300 million would probably be what it would be as a private company. So this new SPAC revolution that we have, I would just caution people to really look at who the promoter is. If it's Chamath, who I obviously have a long-term relationship with in business, we've done a lot of deals together and we're good friends. Someone like that is going to put out a certain type of product, and given how easy these SPACs are, we're going to see a lot of inventory that might be questionable. So only invest what you can afford to lose, folks. There's a lot of red flags with Nikola, and the product's not out. And I'm not sure that Trevor's figured out something that Elon doesn't already know over at Tesla. And so for him to be deriding the truck efforts at Tesla, that he's got a better mousetrap, I find not very credible. And I'm not sure he's figured out some secret sauce, to go 10x in terms of cost savings on hydrogen, which is kind of what he was claiming, that he's going to be able to make this cost 10 times less. I would rather these companies stay private, and it just feels kind of suspect to me. That doesn't mean he's not going to pull it off. So I wouldn't go as far as saying it's a Theranos or a fraud, but I would say be very cautious, eyes wide open. You're investing pre-product market fit, and that's very dangerous, and you're paying an absurdly high price. So that's just two red flags right there that you should know as a retail investor.
Yeah, Jason, it's David. I mean, listen, we've seen the proliferation of SPACs. Everybody's got one at this point. And so I think you can expect that we're going to see more of these early stage companies use it as a vehicle to actually access the public markets. I would point out in this case, Stephen Gursky, a very well known auto analyst. This was his SPAC originally. And, obviously, Trevor had pulled in Jeff Ubben from Value Act, also a very credible investor. But to your point, it's going to be very interesting to watch. It's different than Tesla, isn't it? I mean, he's got an idea, but he isn't necessarily manufacturing all his own stuff and creating his own technology to a large extent. And so it does differ, although it was enough to get GM involved, at least, to the tune of at least taking $2 billion worth of stock.
Yeah, these SPACs are making me they're inspiring on one side, because I do think we want to see retail investors be able to invest in an Uber or an Airbnb, 5 years earlier than maybe they did, so they could see that appreciation, right? So, and we would like to double or triple the number of publicly traded companies and have a little more choice there and a little more competition. That would be good. But I think people are going to need to shift gears a little bit and then ask themselves, just because this looks like Tesla doesn't mean it is Tesla. And, Tesla has an engineer at the lead who is, perhaps the most brilliant engineer of our lifetime. I think it's a pretty good argument to be made there that Elon is. And I'm obviously close friends with Elon. And, I've known him since before, Tesla even existed. And,
but he is a great promoter, Jason. He's a great promoter.
But he's produced 4 cars.
I mean,
yeah, and he's produced 4 cars. Yes, and before that,
I mean, it's not that he hasn't shared hyperbole with us in the past. Yeah.
What Elon does is he sets absurdly hard targets for himself, and then he inspires a team to get there. And I don't think that, at this point in time, Tesla was worth $11 billion. And it wasn't, publicly trading hands. Elon's entire net worth was in Tesla, and he was negative $10 million. And he's been pretty public about living off a loan from a billionaire friend that was giving him $200,000 a year to keep him alive for that 1 year when Tesla almost died in the financial crisis. So this was a very different kind of situation. The fact that Trevor also took money off the table, that was a red flag for me. So again, lots of red flags. And I think it's important that we all have this conversation about SPACs, which are very exciting. But I'm starting to it's got that .com feeling, Dave, when people, when you go to the gas station and the gas attendant was asking you what stock to buy. These SPACs have, some promoters who I think are questionable, and I think they're looking to flip companies. And I'm getting phone calls from a lot of people I've never heard of who haven't been in business for 10 years, and they've suddenly got a SPAC and they're asking me for inventory.
That .com
and that's
feeling.
A little bit strange.
I'm hearing the Righteous Brothers. I'm hearing the Righteous Brothers with a remake here, Jason Calacanis.
Yeah. Thanks for having me.